So let's take this conversation forward and start to look at what happened as our industry evolved. And this is a reality whenever you're dealing with a new client. Remember, no matter how professional you are, no matter how professional your client is, they can only judge you based on the people they've previously dealt with. They've never dealt with you or your business before. And the problem for clients when they're looking at us as an industry is they really don't know what they're going to get. Because in the industry, there's a whole group of different people who operate in very different ways when I'm looking at this thing called financial advice, because of that evolution from commercialism that I discussed earlier. There are people in our industry who are still pure agents. They act on behalf of a product provider. They're only interested in a short-term relationship. Their key job is focused around the sale of a product and then to move on to the next person. The good analogy to have in your head about this kind of a person would be the person on the phone at Outsurance or My Way or companies along those lines. They don't even pretend to give advice. They just tell the client about features and benefits about products, and the client then makes the decision to purchase that or not to purchase that. They don't have an ongoing relationship. They're not going to review you. Once you've got the product, you've got the product. It's your responsibility to do that. So there are clients who do just want to buy products, and that facility is available to them. A lot of that's becoming online as well now. So there are online sales that people are able to work on. There's another group within the industry, and I think a lot of people fall into this. So a lot of people within agencies at places like Old Mutual or Sunlum or PPS or Discovery or wherever we happen to be, with forces would be in this group, and an awful lot of IFAs I think are also in this group. So these groups provide some advice to clients, but they've still got a heavy emphasis on product solutions. So a typical advisor, and this is my word advisor, by the way, and I've used advisor advisedly here because I think most advisors fit into this group. They'll have a relationship with 1, 2, or 3 companies that they're close to. So they will have a relationship with 2 insurance companies, for an example, or 3. They'll have a relationship with the platform. They'll have access to certain investment solutions through that platform. They'll have a relationship with a short-term company. But where they tend to position themselves is as a comparative sort of a process. So if you come to me and you want life insurance, what I'm able to do for you is give you a couple of options. I can say, here's option 1, here's option 2. What would you like to do? Or which would you like to purchase? I can get you a cheaper solution than somebody else. For example, I can get you a cheaper quote because I've got relationships with a couple of companies. I can look after you broadly. I don't just do insurance. I have a relationship with a platform. I have a relationship with investments. So I can help you in those kinds of ways. So the access is there. People have got these variables that they can bring in, but businesses in this group still tend to act as multi-agents. So now they're representing the interests of 2 or 3 companies rather than just one company. And they're concerned and they're leveraged by companies around things like their agency agreement from the insurance side. If you're not moving a certain amount of product, I can't maintain that agreement with you. So you need to be moving a certain amount of that product. Business cards from these companies, you'll often see company logos on them. So the business card will say PPS and Old Mutual and Sunlum. They'll have those things on their websites, etc. So there's some groups there, and this is the group where the conversation about product tends to be front and center. We've seen a lot of people in this group going out to clients with company labeled folders, etc. So from the product providers, rather than their own brand or their own discussion. Their relationship tends to be about product, their conversation tends to be about product, and again, it tends to be a bit of a short-term relationship. So if you look at the agent and you look at the advisor, and these are my definitions, they're not dictionary definitions, these 2 groups tend to represent the interests, consciously or unconsciously, of the product providers. They sort of see their key role as selling insurance or selling investments, and distributing the right amount of those is key to my functionality. That's what my job is, and that's what I actually do. So you'll see an emphasis on new business in these businesses and less of an emphasis in retaining clients or ongoing business with clients. So that's because of the focus that they've got. So if your focus is representing the company's interests, then you're interested in commercial outcomes, which is selling as many products as possible. So that will then filter into your business. So if you start to look at where do companies get their value and what do they prefer, not PPS, I'm sure. But for a lot of companies, if I'm trying to distribute a lot of products, those type of businesses are attractive to me because I can understand the way that they're thinking. We're both in the business of selling products, so we talk the same language. We can talk about new business. We can talk about new clients. We can talk about new sales much more. There's another group which is emerging rapidly now, and I call those the advocates and the administrators. So the advocate and the administrator have made a very, very important business decision when you look at the line between commercialism and professionalism. And that decision is that they have decided to put the client's interest first always. That's their main job. So my main job is to understand the client properly and to put their interests front and center. Now, what does that mean? If you look at your job, guys, what I think you need to do is you need to say, this is not selling a box. This is not selling a television. This is not selling a cake. This is a very complicated legal contract. And how that legal contract is completed will determine whether or not the client sitting across from me experiences an outcome. Now, the reality is in South Africa today, we don't know how many life insurance policies are in force. But at a good guess, based on orphan books and other things within the companies, I would guess that somewhere between 15 and 20 million policies are paid for every month in South Africa. So 15 to 20 million premiums are being collected from different individuals and entities each month that we're going through. And those premiums will vary from a couple of R100 to tens of thousands and hundreds of thousands of rands, depending on the size of the insurance that's been put in place. Now, the purpose of life insurance, people hold it so that if something goes wrong, we will experience a payout in form of a claim. So we would expect, I guess, a decent number of claims to be paid in South Africa each year. And we do see statistics from the companies on the rand cents amounts that have been paid, but we'll very rarely see statements on the number of claims that were physically paid out. I spend a lot of time trying to find those numbers, digging around in places like ACISA and other groups to try and work out how many claims are paid in a year by all of the insurance companies in South Africa. And I got a number for 2018, so it's a couple of years old now, but it at least gave me something concrete to start to understand how many people are getting to the end result after paying for the premiums that they've got. And the answer to that question in 2018 was 14,000 claims were paid. 14000 claims were paid by all of the insurance companies in South Africa over a 12-month period in 2018. 15,000 claims went to the Ombud. So 15,000 claims that weren't paid ended up in legal pursuit with the Ombud, and 98% of those were found in favor of the insurance company. So they weren't paid either. Now, is this a giant conspiracy? No, it's not, because most people stop paying for insurance before they die and need that insurance. So there's a good reason, number one, that might be the case. But it worries me that more cases were taken to the Ombud for non-payment than were actually paid out. Now, why was that the case? That's the case because insurance is a very complicated contract, and the client information given in that process will determine whether or not the client receives their outcome. Now, if I think that you're trying to sell me a product and you're asking me very personal questions, and I know the answers to those questions will affect the premium that I'm going to pay, is there a chance that I might give you incorrect information? If you're just asking information from me verbally rather than trying to check it properly, is there a chance that I will give you incorrect information? And if I give you incorrect information, has that contract been formed properly? And the answer to that question is no, it has not. So insurance actually relies on, and investments as well to a certain extent, but insurance particularly relies on the relationship and the exchange of information between the advisor and the client. Now, through compliance, we have created a legal situation where the client signs documentation to say, everything's my fault. And if I give you incorrect information, that's my problem. Now, as professionals, the question I would ask you is this: is that good enough? And the people who are moving to the advocate and the administrator side are saying, well, no, it's not. It's not good enough. I need to establish a relationship with my client that gets them to understand how important our relationship is and how important honesty in our relationship is, because I cannot do my job. I cannot form that contract properly if I do not have correct information from the client. In fact, the whole insurance system falters if we don't get that correct information from the client. So that job becomes utterly and completely central to what's moving through. So what's the difference between the top two and the bottom two? My simple answer is the agent and the advisor sell products. The advocate and the administrator get claims. So if you are on the advocate or the administrator side, what you need to start to do, or you want to be on that side, is you need to start to say to your clients, I'm not in the business of selling policies, I'm in the business of getting claims. That's my purpose. That's what my business does. If you're going to engage with me, we're going to work over the long term to make sure these products do what they're supposed to do for you. Your interests are first in my world. I will hold the companies responsible for the contracts they have in play because I understand those contracts. I understand how to form those properly. Now, if you're going to do that, you have to be an excellent administrator because you need to maintain a relationship with that client. The product itself is much less relevant than the knowledge you have about the client and where they are in life and how their circumstances may have changed. So you need to be able to administer your business and your relationship with the client so you always know where the client is, so that you always have an understanding of their situation. That way, you make sure the contract with the companies that you're working with are always current. So that's a hugely important thing to start to understand. And I'm sure just having that conversation and explaining a business in that way, you would start to see that a client might value that more than somebody who says, I sell insurance. So the client value increase is going down towards the advocate and the administrator, but from a distribution side, from an insurance company perspective, I understand the agent and the advisor better than I do the advocate and the administrator, because in distribution terms from the insurance company, I assume my product does what it says it's going to do. I have been in boardrooms in multiple insurance companies and given them the statistics I just gave you, and they've called me a bald-faced liar and asked me where I got the information, and I've had to say from you at the end of the day. So even within the companies, there's this acceptance that my product does certain things because the actuary designed a good product. There's a lack of understanding about what is needed contractually to actually make that work. And that's where your role absolutely comes in. So the reality is, moving forward, within the advice industry, we've got this standoff where we've got a commercial side and we've got a professional side. And this is what things like RDR are really trying to highlight and emphasize. RDR is trying to say, if you want ongoing income from a client, then you need to demonstrate the fact that they're receiving ongoing value. If you just want to sell, then you can't expect ongoing income to exist. You have to be able to define your value. Now, if you think of yourself as an advocate or an administrator, defining that value starts to become really simple to do. It starts to become something that's much, much clearer. If you understand fundamentally my job is to get a claim, then your whole relationship with the client shifts. The whole way you operate psychologically is different, because now it's about you understanding the client, not you understanding the product, not you going to the latest compliance session. You need to do all of those things as well. Like the doctor has to go to their CPD days and get their education and understand the latest information. But the key thing that you're supposed to do is translate that back into the client's world.